A home seller's guide. Navigating capital gains tax is important for real estate transactions, especially for home sellers. Key highlights. Capital gains tax applies to profits made from selling your home, but primary residences have favorable exclusions. Introduction to capital gains tax for home sellers. Learning about capital gains tax for home sellers can help you make smart choices and lower your tax liability. What is capital gains tax? Capital gains tax can apply to many assets. Why it matters for home sellers. These include how long you owned and lived in the home, your total taxable income for the year, and your filing status. The basics of capital gains tax in real estate. It's important to know the difference between short-term and long-term capital gains, as they are taxed in different ways. Understanding short-term versus long-term capital gains. Understanding the difference between short-term and long-term capital gains is crucial for homeowners looking to sell their property. How capital gains tax affects home sales. Luckily, the IRS offers some exemptions and deductions to help lower this tax on the profits. Exemptions and exclusions for home sellers. The IRS has good exemptions if sellers meet certain rules, which can help in avoiding capital gains taxes. The primary residence exclusion explained. It lets them ignore up to $250,000 of capital gains if they are single, or up to $500,000 if they are married and filed together. Special considerations for married couples. They can leave out up to $500,000 in profits if they file a joint return. Calculating your home's cost basis. These costs can raise your cost basis and lower your taxable gain. Original purchase price plus improvements. Your home's cost basis is important for figuring out capital gains tax. Adjustments to cost basis for inherited properties. This step up in basis means that any appreciation in value during the deceased's ownership is essentially erased for capital gains tax purposes. Capital gains tax rates and brackets. Capital gains tax rates can change. Current rates for single and married filers. Always remember that these rates might change with new tax laws. Planning for tax rate changes. This way, you could benefit from a lower capital gains tax rate. Strategies to minimize capital gains tax. Minimizing your capital gains tax liability when you sell your home is a smart financial choice. Timing your home sale for optimal tax benefits. These rates are often lower than your ordinary income tax rate, especially for long-term gains. Using losses to offset gains. Tax loss harvesting is a smart way to manage your investments. The role of debt in capital gains calculations. The amount you still owe on your mortgage when you sell can change the taxable gain you report. Mortgage payoff and its impact on gains. Paying off your mortgage doesn't lower your capital gains. Refinancing and home equity lines. Adding these costs can reduce your taxable gain when you sell your home. Special situations affecting capital gains tax. Events like divorce, death, or getting a property as a gift can change how much you pay in capital gains tax. Divorce, death, and real estate gifts. Gifting a property has its own rules, too. Military service and temporary work assignments. To help with this, the IRS provides certain exemptions and longer time frames for military members and those with temporary jobs. Reporting and paying capital gains tax. If you do not report correctly and pay on time, you might face penalties and interest from the IRS. Necessary forms and documentation.